Hello everyone and welcome back to my channel. As of every week we will jump into the fundamental sentiment, but in today's video not the technical analysis of different currency pairs. Why? Because there is no opportunities yet on my strategy. Maybe hopefully when data comes out during the next week something will change and we will have some opportunities. First of all, we will jump into the results of my fundamental and sentiment strategy. You can clearly see right here that USD is still the strongest, Australian dollar, pound and Japanese yen. From a fundamental perspective, these are the strongest currency pairs, and we have the Swiss franc the weakest. Now, the problem is that from a sentiment perspective, the New Zealand dollar, Swiss franc, and the Canadian dollar, euro are still very strong compared to the fundamental strong currency. So we have the USD very weak from a sentiment perspective, the Japanese yen very weak from a sentiment perspective, and at the end, if you can see in the final rank, these are affecting the overall market conditions. That's why I'm still currently out of the forex markets. I will not be taking trades until we get sentiment shift. Okay, so usually fundamentals takes time to change. That's why every single week you can clearly see that there is no much changes in the fundamentals, but sentiment changes a lot, and this is what's happening right here. Hopefully if we can see some of the fundamental strong currencies shifting sentiment into strong sentiment, and some of the weakest currencies shifting the sentiment into weak sentiment, we will have a trade idea, a pair to trade, and a trade opportunity if the technicals align. If the technicals do not align, also we will not have the opportunity. So last week I did not take any trade because of my strategy did not allow me to take any trades. Also this week, hopefully, we will jump now into the economic indicators. What are the data that's coming out during the next week, which will help us define whether there will be opportunities or not. Also, if you can see, I have something called indices strategy. So I'm working on finding a strategy to find where is best prices to enter the long position, because I don't like to short indices, I just like to long indices, because on the overall market, on the overall conditions, they are always trending to the upside. Every single dip to the downside is just a retracement. So if you can see right here on the indices strategies, it's based on interest rate cycle. So whether the central bank is a hiking cycle, holding, or cutting cycle, this will affect. Usually on a cutting cycle there will be bullishness of the indices stock market. Also inflation, if inflation is around the 2% target and is controllable, so let's say 2.5, but it's controllable, it's as expected, as anticipated. Also inflation can play a huge role in the stock market. The GDP also, if the GDP is, let's say, above 1%, 1.5%, or even increasing, this will help the stock market to rally. Also, if we have a strong participation rate, so strong employment rate and weak unemployment rate, this will help also. And also if there is rate hikes, it will be bearish for the stock market, and if there is rate cuts, it will be very and strongly bullish. As you can see right here, the UKX is the index of the pound, SX5E is for the euro, and ASX is for the Australian dollar. Now if we go right here to the charts and we move into pound, euro and Australian dollar indices. So this is the S&P 500. It did not yet give me a bullish scenario on the SPX, so that's why I'm not right here. I'm not, it gave me, so I was putting it wrong. It gave me a bullish on the S&P 500. So now we are in a good zone right here. This is a demand. We are in a good zone to enter the bullish scenario on S&P 500. We just need to wait for some data for the US dollar, especially for the US dollar. So US dollar, we have important data. Manufacturing is important, and service PMI are important because they give us a forecast for the GDP, so for the gross domestic product, and also we have the unemployment rate and average hourly earnings on Friday. We shall see how the forecast will be, and based on these data we can have a bullish scenario on the SPX or Nasdaq or different indices for the US market. So this is one of the indices I'm looking at, but my risk will be very minimal because I am starting new on this strategy, so that's why it will be very minimal. Also, we say UKX is bullish, so if we get a retracement into these areas with good fundamental data, hopefully we can take a bullish scenario. So here will give me an idea if I want to take a long position or not on which indices, but I still focus on these economic indicators right here because let's say the manufacturing and service PMI, consumer confidence, retail sales play a huge role in approximating the GDP for the next month, which is helpful. So manufacturing and service PMI are somewhat leading indicators, and retail sales are somewhat leading indicators for the gross domestic product for the next month. Now after we saw UKX, we have right here, also we need to wait to see which day we have good data. So we have right here MPMI, manufacturing, also we have the service PMI, and that's it for the pound. So maybe I will wait for the global S&P global service PMI because always the service PMI has higher impact on the GDP than the manufacturing PMI because these are tech. There is a lot of tech companies. So if, for example, let's say in Australia, I will focus more on manufacturing PMI because there is a lot of factories and manufacturing process. So it depends, but usually both are important. it just differs a little bit between country and another. Also, we have euro. Euro has inflation data this week, so let's see which day. Euro inflation data on Monday. So on Monday there might be an opportunity if the fundamentals align. So let's go to the euro. Okay, great. Right here we are in a great position to take a long position if inflation data comes out as forecasted or good for the stock market. Also, euro is still looking to cut interest rate, so they are in a cutting cycle, which is very beneficial for the indices of euro markets. Also, we have the Australian index right here. We are bullish. Also, we might be bottoming out before continuation. So let's see how the reaction will be, let's say from this area, or maybe lower a little bit, so something like this, but I will keep it right here. We need to wait for data to come out. We have AUD right here, retail sales, interest rate decision, and manufacturing PMI. See how it will affect the stock market. Then we have the services and balance of trade. So there is good news for the Australian dollar. Hopefully it will give us some opportunities on the indices side. So from a forex market perspective, my strategy is giving me nothing, okay? So I have right here the S&P 500 opportunity, like this. Also I have the UKX opportunity, euro, and the Australian dollar opportunity. Hopefully they will give us entry, and we shall see how the strategy will play in the indices market. So the rules of indices: interest rate going down, GDP increasing, unemployment rate going down, and some ideas that growth is happening, interest rate is lowering, so borrowing cost is decreasing. So it's much better to see how this strategy will play out, but the same technical analysis, because I don't differentiate between technical analysis. It's just about fundamental and sentiment analysis. We shall see how the sentiment will play out for these indices, and hopefully also some changes coming into the forex market, because I like to trade the forex market. I have better experience and better knowledge going into the forex market. This was everything for this week. Hopefully it was beneficial. If you like this type of content, don't forget to hit the like button and subscribe for weekly analysis like this. Until the next week, stay safe.